Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of May 8th through May 12th, where we'll try to help you make money trading in the month of May. So we'll get started. Again, try to help you make money trading in May. This is part one of our weekly trading game plan for the trading week of May 8th through May 12th. So let's get started. Welcome to Crow, Clifford Mantley, Walter Lyons. Thank you all for joining us in the live chat today. Hope you all had a great week, are doing well. So here's our Google document with our notes for our weekly trading game plan for part one for this week. You can find a link to this Google document. It's publicly accessible in the description box below. We keep our Google documents in a publicly accessible Google Drive, so you can find the link to that Google Drive folder in the description box below, so you can refer back to these notes, also the notes from our previous weekly trading game plans. And our notes documents contain links to bonus videos, links to all the tools that we use for our market analysis, our strategies, etc. So again, you can find the links to those in the description box below and refer back to them at your leisure. So we'll get started and see how the markets ended up on Friday. Jump over to FinViz Home. See after essentially the employment data, and we'll talk about that in more detail. But even though that was essentially better than expected, which normally would be a negative in terms of Fed interest rate hikes, see the market had an exuberant run up. All the indices were up. NASDAQ was up over 2%. S&P almost up 2%. We see, the heat map, almost everything was in the green. Had many more advancers than decliners, 6,500 to 1,500, so 80-20 advancers. Highs and lows was about split 50-50. We still only got 46% above their 50-day moving average, 54% below, and still only 41% above their 200-day moving average. So again, even though it was an exuberant rally on Friday, there's still significant weakness under the covers, and most stocks are below their moving averages. And we can see, even though we had this run up, it's showing a bearish signal. Welcome to Ricky Khan, Flip of the Shippa, Easy Mike. Thank you all for joining us. Hope you all had a good week as well. We'll look at the recent news. The Berkshire Hathaway meeting is going on today. I'm sure you've heard about that. We'll hear what comes out of that. So Warren Buffett, Charlie Munger, we'll hear what tidbits they come up with. Dow jumps. While weak in banks, we'll talk about banks. We'll talk about the labor market defies rate hikes, strong job gains. And I did just see a news item pop up about Ukraine shooting down a Russian hypersonic missile with a Patriot missile. So I don't see that popping up yet, but that may cause some sort of turmoil if that is confirmed. So we see, we'll look at the oil futures. It was kind of wild. Oil broke down below 70 at one point, then bounced back above 70. And again, in the futures, we'll see what might be going on with oil. Again, natural gas has been pretty range bound between 2 and 3, bounced off of the low 2s again. We saw gold. I don't think it made a new high, but it came real close to its previous high. Got good support around 2,000, trying to make new highs. Same thing with silver. We'll see it has good support around 25, ran up about 26 something. The dollar's been oscillating. This is interesting. It looks like the yield curve on the treasuries is no longer inverted. At least the 5, 10s, and 30s are no longer inverted. So there was a significant correction. The shorter term bonds or yields adjusted downward, the longer term upward. So it has been inverted for a long time, which indicates a recession. It looks like now that inversion is ironing itself out. Doesn't mean we're not going to have a recession. It just means farther in the future, maybe it'll be a shorter term recession. So we'll look at the indices and then the groups and sectors, etc. Look at the SPY. Again, we've seen this, these previous tops are providing significant resistance. So it's pretty much, testing that high, getting rejected off of it. We see, it didn't quite test that on Friday. I would expect it to test that high again, get rejected off of it. As we've been talking for a while, market's been very range bound. Zoom out a little bit. Again, we see this. We haven't really tested the previous high. So, it's oscillating like a harmonic oscillator, approaching a steady state, but again, very, very flat, very range bound. It is above both the moving averages. So again, I would expect, eventually it would turn down to test those moving averages as well. Crow says the official recession will be in 90 days. Actually, the official recession will require 2 quarters. Yeah, so that's appropriate. I would agree with that. It's going to take 2 quarters of negative GDP. Quarter one was still positive, so it would take quarter two and quarter three to both be negative, and then they'll come out and announce, yeah, we were officially in a recession. So yeah, I agree with that statement, Crow. Good point. Q's very similar. You see it's run up significantly. It hasn't broken out of the previous high. Again, floating above the moving averages. Again, a lot of resistance at this level. So, and again, we see this. I don't remember what kind of hammer they call that, but a strong hammer candle where it tried to bounce down and then pretty much closed at the same point that it opened. So strong hammer. Look at the Dow. Again, very similar. Again, hasn't reached its previous highs. Again, this level is, there's a lot of resistance at this level. They tried to push it down briefly, bounced back up. So it got a similar hammer, more of a hammer, somewhat of a doji there. Again, above moving averages. So again, a lot of resistance in this range bound area. Got IWM, the Russell. Russell's a lot weaker. It's under its moving averages. Again, you got a doji type candle on the week. So again, a lot more weakness in the Russell. Heavy resistance from the moving averages, the overhead moving averages. A lot more potential downside in the Russell. Could very easily go down and test the most recent lows from October. So look at the VIX. The VIX was kind of a roller coaster. So we see it briefly popped up. I think it got into the 21s very briefly and then dropped off. If I go to the daily, so again, we see it peaked almost to 22, dropped off. If we look in, we can look in Webull, it's now in the low 17s already again. So it dropped off very quickly. As we've talked in the past, it seems like the zero DT options are providing a lot of dampening effect on the VIX. So even though when it did pop up briefly, it didn't hold and drop back very quickly. So now let's look at the groups, the sectors, the industries. Again, a lot of sector rotation. We've been talking about that. This is really the name of the game to play, given the heavy resistance in the indices. One of the best ways to make money in May, particularly, is going to be playing these sector rotations. Again, we don't expect the markets to really trend, although we'll talk about the Fed interest rate hikes and the next potential Fed interest rate hike in June, and our strategy for playing the interim period in May. But again, heavy sector rotation back into energy, into basic materials. Real estate's been moving up. We saw it auto, utilities, and consumer defensive, which there was a rotation in there when we had the risk off. So we see for the week, energy was very negative, but on Friday they rotated back into energy. Financials, is highly volatile given the bank collapse issues. It depends who's going to go under next and when those announcements come out. Same thing with technology, rotations in and out of technology based on, the FANG earnings, etc. Basic materials, again, moving back up the chain. So again, we see here basic materials for the month was down lower. It seems to be moving up. Energy, again, we see now we may be seeing a strong recovery in energy after they've been rotating out of energy for some period of time. Although again, we saw oil drop off below 70, so obviously that pushes the energy sector down. And again, we see real estate slowly making a climb back up. So look at the individual industries. Let me grab a drink a second and check the chat, and then we'll go through the industries as well. Welcome, Kyle. Thank you for joining us. Glad to see you here this morning. Hope you're doing well as well. So again, if we look at the industry, obviously a lot of energy was up on Friday. We saw copper make a recovery, aluminum make a recovery, uranium as part of, energy got a boost. Again, we've been playing this rotation in and out of uranium. Coking coal too. Again, we've been playing that rotation in and out of coking coal. You see it had a big pop on Friday. Solar had a pop, although I don't really like solar at this time. See several of the REITs, even biotechnology. And there was some positive news. Alzheimer trial was positive. I'm sure that helped push biotechnology up. And then again, we saw profit taking in gold and silver. Gold and silver had a big run earlier in the week. We'll see in the weekly it was very strong. So gold was, in the top three. And for the week, silver was pretty high. Okay, we see some of the REITs starting to move up. Semiconductors was positive for the week. Again, for the week, aluminum was negative, steel negative, solar negative, oil and gas for the week was negative, very positive on Friday. So again, rotations in and out of oil and gas. Looking at opportunities as well for this rotation, there was rotation out of steel, and we've seen that rotation in and out of steel. And I won't talk probably too much today about the debt ceiling issue. We'll probably talk about that in more detail and the effects that could have on some of these sectors, some of these industries going forward as we get closer to it in the next upcoming weeks. But that will have a factor in some of these infrastructure, industrial type areas as well. So again, for the month, uranium energy, some energies. And solar very negative, oil and oil and gas, thermal coal, silver was negative for the month, and then we saw a nice pop. So again, we'll see that in the futures as well. Yeah, potash, Easy Mike, we'll talk about that. An opportunity we've been watching in the potash industry again tomorrow. And yeah, we'll talk about dividend payers. Yeah, we've got UAN in our dividend payers spreadsheet, and we'll talk about dividend payers as well tomorrow. So let's talk about the economic. We got quite a variety of economic data. We got the Fed interest rate decision this week. So I'll quickly whip through. I'll bring up the investing.com calendar, and then we'll talk about some of the highlights from the economic data this week. Some of the commentary I picked off from from Powell's press conference. So we saw factory orders was down. JOLTS, which is open jobs, came down, which that's, as expected. if we're tightening the labor force, if they're canceling open jobs, they're either filling them or canceling them. The open jobs should go down. The Fed should like that. Um, and then on Wednesday, here's the notes. We got the 25 basis points rate hike as expected. I've been saying this for quite a long time. That was the expectation. We saw the probabilities last week in the Fed monitor tool, etc. That was the probability. Some notes from the statement is they omitted prior language that signaled more hikes ahead. Although one of the things I noted in the press conference is they kept trying to get him to say pause. Were they going to pause? And he was not going to say the word pause. So they're not saying that they're expecting more hikes, but they're not saying they're eliminating them either, and that they did not make any commitment to any kind of pause. And cuts, as I mentioned for a long time, are off the table for this year. Even though the market keeps trying to price them in, the Fed says the cuts are off the table for this year. So, and higher for longer, and we've been saying this for a long time. Um, whether they need to firm more depends on the data, depends on the economy. We're still getting mixed signals, mixed data. They're, com- continue to repeat that the banking system is sound, and yet this weekend we might see another bank get taken over. So we'll see. But everyone keeps reiterating they're trying to stem the fear. They don't want more bank runs. But I think the dominoes are going to continue to fall. Tighter credit conditions likely to weigh on activity. So yes, we know credit tightening. So small businesses, etc. Nobody's going to be able to get loans, particularly with both increased interest rates and the bank collapses. They'll take cumulative tightening into account. So the tighter credit conditions is something they are taking into account, and inflation remains elevated. So inflation's coming down slowly, but it's taking a lot longer than they wanted and perhaps that they expected. Same thing with the ECB saying essentially the same thing. And it's it's going to take time. The labor market's slowly going to tighten and inflation's slowly going to come down. Some of the other notes from the press conference, they're continuing to run off their balance sheet, so reducing security holdings. They noted labor market's still very tight, and as we'll see when we got the employment data, it is still tight and not slacking as much as they perhaps would like. Demands exceed supply, so the participation rate again still low. Unemployment rates at multi-decade lows. They're still holding to their 2% inflation target, so they're not going to come off of that. And again, they couldn't. The press guys could not get him to say pause, and they're going to make decisions meeting by meeting, depending on the data, and they're not going to cut. So again, those are all my takeaways from the Fed decision and press conference, and pretty much that's what I've been saying. That's what I expected, and the market wasn't terribly pleased that they didn't hear pause, they didn't hear pivot. So as we saw on Wednesday, we had a Wednesday, Thursday were pretty negative for the markets, and then we had this exuberant recovery rally on Friday. So again, job cuts were actually less than previous. Jobless claims, again, less than expected. So again, unemployment's not going up. The unemployment rate, was very, very low. Another thing to note is productivity is very poor. So even though they're not decreasing the employment heavily, productivity is still poor. And the unit labor cost was higher than expected. So there's still a risk of wage price spiral. And after this data came out and the employment data on Friday, they were starting to increase the probability of a 25 basis point hike in June. So again, we see average hourly earnings were up on Friday, hours steady. and payrolls, non-farm payrolls was much higher than expected. Participation rate didn't increase much, and the overall unemployment rate is 3.4. So again, multi-decade low unemployment, wages going up, participation not improving. So the job market is still very tight. So normally that would have been perceived as a negative, I think, by the market, but it really wanted to rally, particularly with the Apple earnings. Apple beat on earnings, even though their guidance going forward wasn't very positive. I think, again, they ran the NASDAQ up 2%, and I think they just really wanted to rally on Friday. So that's what we got, and we'll see how long this holds. Again, I expect they're going to hit the indices are going to hit those levels of resistance that we saw, and we're going to get a rejection and a turn back down. And again, in the longer term, in terms of making money trading in May, I expect the markets to continue to be range bound, to continue to oscillate between their trend lines and the bouncing off the moving average, at least through May. Probably going into and they'll oscillate based on the economic data. It'll trigger, uptrends, downtrends based on the economic data. And as we'll also see, we're going to get Fed officials are going to come out and start talking again. And if they sound more hawkish, it'll be negative, more dovish, it'll be positive. So again, a lot of gyrations, a lot of oscillations. So we'll spin through, see if I missed anything from the past week. So PMI is a little worse than expected. That's an inflationary indicator. ISM is pretty much in line. Factory orders, again, a little low. Job openings down. ISM a little bit down. Again, that's more of a recessionary indicator, so indicating we're headed, slowly into a recession. Gasoline inventories were up. And again, some of those might have been the cause for oil dropping, but more recessionary fears and the bank collapse is causing the oil price to drop, as we'll see. When we talked about jobs on Thursday, Friday, and the rig count's dropping. So supply is dropping, but again, the price drops. So again, it's not the price hasn't really been being driven much by this data. So let's see what we've got for next week. I did highlight a couple things in our notes. So Wednesday, we've got core CPI. So really, there's very little Monday, Tuesday. Wednesday, we've got CPI. Thursday, we've got jobless claims and PPI. And then Friday, Michigan sentiment. So most of the economic data will be Wednesday, Thursday, Friday. So I expect, more volatility Wednesday, Thursday, Friday. Monday, Tuesday will be probably more digesting the events from last week, and if we get a bank takeover, a bank collapse over the weekend, that'll probably be the big driver on Monday. Also, if this Ukraine-Russia war heating up is valid, then we might see that causing some turmoil on Monday as well. So again, not much Monday, Tuesday. We again start getting Fed officials talking again. So again, that might cause some volatility depending on if they're more hawkish or more dovish. And we got CPI on Wednesday. We've got Fed budget balance, jobless claims, PPI on Thursday. We've got our normal oil and natural gas storage data, but again, I don't think that's been driving the price a whole lot in the near term. And then we've got consumer sentiment, which again doesn't really drive a whole lot. But if their inflation expectations are still high, that might play into that inflation is not coming down as quickly as the Fed would like, and then it means they have to hike again. Again, you can find the earnings calendar. We've still got earnings. We've got, Berkshire just announced today. I haven't heard what theirs is. We've got some drugs. Uh, McKesson, we've got some energy companies, Tyson, so food, consumer defenses, Palantir, meme stock type thing, Lucid. So again, you can see the whole list here at investing.com. And there's also a link in our notes where you can access this and, keep an ear out. Nowadays, if they miss on earnings, they get, punished brutally. If they beat on earnings, then the question is, what's their guidance? If they could beat on earnings and if their guidance going forward is poor, they're still going to go down. So again, keep an eye on who's reporting. What are they saying? What impact does it have in this sympathy plays in the same sector? Again, we've had whole videos, strategies on how to play earnings, and that earnings matter again. So again, I hope that all helps. Welcome, Tony Rosas. Yeah, Tony says it's all about guidance. It's about both. They gotta meet or beat, and then what are they saying about the future? Because again, as everyone says, the stock market is a forward-looking mechanism. So it's how are they going to perform in the future? Although again, it was interesting with Apple that they beat on earnings. They're doing a huge stock buyback. But their guidance is poor. Their sales are decreasing going forward, at least for this year, and yet they got a big pop. And it's again, everybody wants to be in Apple. It's a big fang stock, big part of the market, kind of an ATM. People can stash their cash there, and it's relatively safe. It's not going to dump like a regional bank. So the next FOMC meeting isn't until middle of June. So we've got 6 weeks. Again, between those periods, it's going to, every economic data point, they're going to be guessing, is the Fed going to have to go 25 points again in June? Are they going to pause in June? And then every Fed speaker that comes out, again, is going to cause more volatility. So again, just more chop, more oscillations depending on the data coming out, etc. So we looked at the earnings calendar. Also, I want to show you we've got earnings reports channel in our Discord. Our Discord's free to join. You can find an invite in the description box below, and I'll throw that up in the banner as well. And then I'll show you that earnings reports channel. Let me grab a drink a second. Also wanted to point out that as the economic data comes out, I try to snapshot the important data and paste that into the Surf the Markets channel in our Discord. Again, our Discord's free to join. You can get this data as quickly as it comes out. Again, I'll paste a screenshot from investing.com, the raw data. We also have a feed from this Walter Bloomberg, and it will post the economic data rather quickly, and also interpretation, so articles of interpretation, and also what the Fed officials are saying, etc. You'll get a real-time feed in the Surf the Markets channel. And then we have earnings reports. As earnings come out, they're automatically posted from this earnings news. EPSGUID Twitter account is automatically posted in the earnings report channel in our Discord. So again, you can get up to speed, current, real time updates on earnings, economic data, etc. Also, dividend hikes we've got in the investing channel. Any dividend hikes, and I'll probably reiterate that later as well. So Again, we've got a feed for dividend hikes in our Discord. So again, join our Discord to get real-time updates on all that economic data and earnings data. So I'll now jump over to Webull a second, and we'll look at the market screen. So just a quick reminder, Webull, if you're not currently using Webull, they're still offering 12 free stocks. If you open and fund an account, also you can get, for a new account, you can get up to 5.8% APR on your idle cash via their cash management. So again, great place to put idle cash. It's better to have it in a brokerage account than in a bank. As your insurance is higher, and we've released a short video and had for previous discussions about how you have a higher level of insurance in a brokerage account than in a bank account. So here's the market screen in Webull. We see Friday, we had many more advancers than decliners, but the advancers was pretty small. Number of decliners pretty small with a long, narrow tail. Let's see what the inflows were. We still had more inflows in NYSE. So we see a spike, very soon after the market opened, and then tailing off to the end. And we got quite a bit of a tail, more outflows out of the NASDAQ as the day went on. So pretty significant 1.5 billion outflow out of the NASDAQ. So even though the tech, probably, the FANGs, Apple, etc., popped in the markets, there was net inflow or net outflow out of the NASDAQ. So probably a lot of profit taking, people put money in money markets and etc. Hopefully not CDs, but so again on this market screen, this is the online browser version of Webull, and in this calendar tab, you can also get near-term earnings calendar. So what's upcoming next, and whether it's before market open, after market close. So again, you can keep an eye on what's coming up next. So let's look at the industries for the week. So we see construction, paper. Construction was very positive. Paper kind of split. Pharmaceuticals kind of neutral. Electronics neutral. Semiconductors a little positive. Metals and mining is going to be gold. This is a graphite one. This is that coke and coal we've been watching. Freight, not too bad. Aerospace. Coke. Molson Coors. Look at our ETFs. So up on the Russell, small cap. So again, this is Friday. So yeah, they're running small caps, running the Russell mid caps, running the NASDAQ. TQQQ is the leveraged long on the NASDAQ. Everything's pretty much up from Friday. Mid caps. Again, S&P all up Friday. So again, very exuberant rally on Friday. Short on the VIX. Again, they push the VIX down pretty quickly. Again, long Russell, long small caps. Up China, up Europe. Again, mostly green. Region, they ran KRE up. Again, just, it was so oversold. They tried to run it up. Day trade opportunity, but I think that's a bad idea. My personal opinion, not financial advice. None of our content should be considered financial advice. We're not financial advisors. This is for education and entertainment purposes only. But again, I think that's dangerous, playing with the regional banks. Healthcare positive, biotech. So almost everything positive. Utilities, a little negative on communications. Energy, very positive. Basic materials, uranium, lithium. And we've seen that sector rotation. And even though oil's going down, I think, uranium's headed up. Food and beverage, so defensive. Real estate, again, the recovery in real estate. And again, financials was green. It's been, just pummeled. Oil up. So again, oil made a recovery after it dipped down below 70. We'll see that in the futures in a second. So it's showing, pointing up. Softs, that's cotton. Coffee up. Asia. And we'll look at the dollar. All the foreign currencies are up against the dollar, so the dollar must be weakening. It was, pretty much hovering at 101. I think it popped up to 102 briefly, but it's pretty much been hovering at 101 for quite some time. So look at that in the futures. So again, we see, that, exuberant rally in all the indices, and they're, probably going to test their previous highs. The NASDAQ is, relatively close. S&P's got some room to go. Dow's got some room to go. Russell's got some room to go. So again, if we don't get a bank collapse over the weekend, we might see, an exuberant continuation of this exuberant rally on Monday, early in the week, until we get the economic data starts coming out on Wednesday. If it's, if it shows inflation higher than expected, I would expect a pretty brutal retracement after that. Again, we see the sharp decline in the VIX, popped up to about 22. It's, probably headed back down to 16 unless we get volatility due to the Ukraine situation, a bank collapse, etc. And then I think we'll see a quick reversal, but again, be damped rather quickly. Again, we see, oil spike down to about 65, bounce back very quickly, and it's pretty much, the floor is pretty much 70. So, and 70 was acting as a resistance, but now it's up above 70. So now 70 is kind of the support. So, probably bounce 70 to 75, and then it's got 75 will be resistance. And we'll see if it, goes and tests that low again, or if it breaks out and tests 80 again. So I think there's, opportunity. I missed that spike down in oil. Wish I'd caught that spike down in oil. And I'm going to be watching for that again. So if we get this, a quick downturn in oil, I want to catch that downturn if possible. Natural gas, again, pretty much stuck between 2 and 3. See, it kind of filled the gap there. 2 is pretty much the floor right now. See, gold had made a new high, got rejected. That's providing resistance around, 2050 or so. 2000's a good floor. Silver's sitting above 25. 25 is good support. I think it tested 26 briefly. So again, if we get, further bank issues, that might give another push up in gold and silver. Palladium ran back up. A number of the commodities had run down and then bounced back up. So we see corn, wheat, oats, they all bottomed and bounced pretty rapidly. So again, we'll be looking, for opportunities if it happens to roll over and retest these previous lows or make another low, that might provide some opportunity as well. So again, then we saw the flight to safety initially. Bonds ran up, yields plummeted down, which was counterintuitive given the increasing interest rates. And then when we got the exuberant rally on Friday, again, all the bond prices dropped off and the yields picked up a little bit. Again, we see the dollar's pretty much, stuck around that 101 level. It dipped down briefly, tested 102, but it's pretty much pivoting around 101 right now. So I continue to expect these oscillations around 101, and that triggers some volatility in the dollar-denominated commodities like gold, silver, oil, etc. So keep an eye on the dollar, as well as, if we get the risk off, flight to safety on a bank collapse, etc., that may drive gold, silver, etc. up. Recessionary fears drive copper down, and some of the other industrial metals down, etc. Ukraine issues may have an impact on the agricultural products, corn, wheat, etc. So again, listen for news in those regards as well. So I hope that helps. Okay. And I showed the news feed we have. So let me grab another quick drink, check the chat. I see, Flip is talking about the zero DT, the JOLTS data, etc. Walter AG. So let me grab a drink, and then we'll talk about our strategies, additional strategies for how to make money trading in May. Okay, so our objective is to make money trading in May. We've recently released a number of short videos about, how do the stock markets traditionally, historically perform in the month of May, and what are the best performing stock market sectors and industries in the month of May. So you can view those short videos. Again, that's the historical traditional performance for the markets and various sectors, industries in May. Also, we released our previous discussions that we don't think you should sell in May and go away. Again, historically, the adage is you sell in May and go away and come back in like October. And you can listen to the reasons why that has been a traditional adage. I think if you're trying to make money trading, trying to succeed in your trading career, I think there's plenty of ways to continue to make money trading beyond May, but it's important that we understand that that's kind of the common adage, and a lot of people will probably do that. And so we've been looking out for that selling pressure, for people that will just, okay, they're done, they're going to sell and then sit on cash until maybe October. So volume may decrease. We may see selling pressure due to just that basic adage, and people go put it in a money market or sit on the cash and wait. So I do want to look at how May traditionally performs, and I've got this link to this article that we use in Investopedia that shows the monthly performances, and then we'll look at how April did relative to that as well. So again, you can find that link to this article in our notes. So we see traditionally April's pretty positive. So April's usually 1.5% up, and then May is only 0.2% up. So April traditionally significantly outperforms May, and then we see it goes negative in June. July is more positive, and then we see in the summer it's pretty choppy, and then it recovers in October. So this is kind of where that sell in May comes from, that, this period from May to October is a lot weaker than the prior quarter and the subsequent quarter. So again, that's probably why a lot of people justify that sell in May and go away. Now, we propose that you can make money trading even in a down market. So we can make money on this downtrend or on the uptrend or on the cyclicality. So there's plenty of ways to make money trading in any kind of market. That's the message we try to convey. So we don't think you should just sell in May and go away. So again, part of the message we're trying to send, if you're trying to be uh, not even necessarily a professional, just succeed in your trading career, make money in trading, we think it's best just to adjust your strategies, and you can make money trading throughout the year. Again, you just may have to adjust your strategies and how to make money. So we can see, we expect May to be a very small positive, and then it to be choppy through the summer into the fall. So we want to adjust our strategies accordingly, right? So I do want to jump over to investing.com, and we'll look at performance. So another place that you can find these links to these resources, etc., to the tools that we use are on our homepage under the links section on our homepage, beachbumtrading.com, and I'll throw that banner up as well. So again, there's links to our Discord, all of our social media, our Facebook group, Reddit group, etc., and all these resources we use. So FinBiz, the trading platforms we use, etc. So I can go to investing.com. I can look at the indices. I can look at performance. So the past month, we had expected, I think it was 1.5%. The NASDAQ's the only one that really came close to that, but all the indices were positive. So April did turn out to be a positive month, but it didn't really achieve the historical performance that we expect out of April. So we'll see what that means for May. Still, all the indices except for essentially the Russell are positive for the year. So again, even though it's been bumpy, etc., there's plenty of returns to be had in any of the indices except for right now the Russell. So we'll see if it stages a recovery during what they often call the summer doldrums. Okay, so we've been talking about the bank collapse. As I mentioned, this PACW, in my humble opinion, may well be the next one to go. They may be gone the end of this weekend, just like FRC we talked about last week. I expected them to be gone come Monday, and that happened to be the case. We'll see. I think PACW is the next one. I think there's more to come. So again, be careful. Don't get trapped in this. We don't want to see anybody get hurt. We talked about sector rotations, and we've got a number of videos on how to play that. I do want to look at this subsectors in the technology sector. So again, we added this to our ETF Google Sheet, and again, our all access and VIP Patreons have access to this all the time, so you can monitor the sector performance, including the subsectors of the technology industry via this screener that we've added. So I want to just briefly look at that. So again, if you bring up our ETF spreadsheet, we'll look at this in more detail tomorrow. But if you go to the screeners tab, I've added a number of screeners that I've used over time. And I wanted to look at the subsectors in the technology sector. So we've got FANG-U, LabU, SOXL, and TQQQ, all of which are the leveraged longs on the subsectors of technology. I find this one interesting that, they're trying to run FANG-U back up into that resistance point, and I think there's an opportunity there. If they run FANG-U up there, I'd be looking at potentially playing FANG-D, which is the short on the FANGs. You see LabU, also an exuberant run up. So, approaching that resistance line in the downwardly trending channel. Again, I don't like biotech in general given the economic situation, but again, shorter term trades, you can play that exuberance. We see again, semiconductors broke down out of its channel. Again, it's got plenty of room to fall below that channel. They tried, it's just chopping right now, but again, downside risk there on semiconductors and the Nasdaq in general. You see heavy resistance at that line. It is an upwardly trending channel, but it's just kind of oscillating in the middle of that channel. So I don't see a near-term opportunity for the overall Nasdaq. I think potentially the FANGs, because we know they're going to run Apple up. I think all the FANGs have reported. So again, I think that'll provide some significant resistance. So I hope that helps as well. And again, we'll look at ETFs in more detail tomorrow. We'll talk about our dividend payers, and if we see any specific dividend payers, again, major part of our strategy. We see the markets have been chopping, pretty range bound. It looks like, given the monthly outlook that we just saw going forward from May to October, we expect, pretty choppy, not net positive trending. So, if we want to make money while we wait, and if you did essentially want to quote, sell in May or just kind of stay out of the market in general, a good thing to do would be park some cash in dividend payers and, make money while you wait. Also, we're selling and buying back covered calls, cash secured puts. So again, kind of a lower effort ways to make money, generate income while you're waiting. If you want to wait between May and October, those are some ways very, again, low effort, low time commitment. You can make money, make income while you wait. So we'll go into those in more details in terms of specific opportunities we see with dividend payers and also with selling and buying back puts tomorrow. So if anyone's got any last minute questions, if I missed your question, I apologize. Please throw it back into the chat. I'll try to answer a couple before I wrap up. And then also, if you have any questions after the fact, you can always post them in a comment to this video or any of our videos, also in our Discord. Again, we'd love to see more people, more participation in our Discord. So again, you all that are in the live chats, you can continue these discussions in our Discord at any time. And days that other people don't have shows as well or don't have shows during different times, we can continue to carry on these conversations in our Discord. And you can find invites to our Discord in the description box below, and also again in the link section on our website, beachbumtrading.com, bum without the U. So again, plenty of ways you can contact us, ask questions if you'd like due diligence on a particular stock, etc., trading technique, etc. We'll try to answer whatever questions we can. Uber. I'll try to take a quick look at Uber. I believe they reported decent earnings. I think they're still losing a lot of money. They still have a number of issues. See what it looks like. Oh, I think they're going to correct. So that's a pretty exuberant run. I'm sure that was after their earnings. I think it's going to roll over, correct, fill the gap, retest that resistance, and then we'll have to see. I mean, that's a pretty strong breakout. Again, they're still losing a ton of money. So yeah, no, I think it's going to roll over and retest that pivot point. So to answer that question, my opinion, I don't think it's going to hold. Now, I think when it gets down to it, it's doing a golden cross. So I think it'll bounce off of that initially, may bounce off that pivot point. Those moving averages may reach up to that pivot point. But then, yeah, I think you're going to get a rejection. Again, my opinion, but Okay. So again, if you have any subsequent questions, please feel to post them in a comment under this video. I hope that you like this video. Again, we'd love to grow our beach bum trading community. We hope you'll share. We hope you'll click the thumbs up button on this video. Help the YouTube algorithm share this with further traders. Please invite your fellow traders and to join us in the live chats, live streams, in our Discord, etc. Let's build the community for everyone's mutual benefit. That's our objective here, is to build a community of traders that help each other succeed in their trading careers, and that's why we're here. So if there's anything else we can do to help you achieve that, please let us know. Hopefully you all will return tomorrow. We'll do part 2. We'll select our individual stocks, ETFs, etc., to put on our top swing trading stock watch list, our bullpen shopping list, etc. Again, we'll talk about dividend payers, ETFs, and our option strategies as well for the upcoming trading week of April 8th through April 12th. So hopefully we'll see you all back 10 a.m. Eastern time for part 2 tomorrow, and we wish you all a great trading week. Thank you, and have a great trading week. Bye.